Hello and welcome to this Tuesday's morning market briefing. We've got a lot to talk about, but firstly, economists forecast $500 billion annual hit from new Trump tariffs, as well as that the death of Ebrahim Raisi to test the unity of Iran's hardline factions. We've got lots to talk about on the charts also, with lots happening on the economic calendar as well, but we'll come to that near the end, so make sure you stay around so you can see that. Before we get straight into it though, make sure you subscribe. The first article to talk about is to do with Trump's new tariffs. Now, new reports published by the Peterson Institute now show that Donald Trump's economic policies will disproportionately hit America's poorest households. This comes as a result of Trump's new promises to introduce tariffs on all US imports should he come to power. Now, we have, of course, been covering a kind of presidential election race somewhat so far. However, of course, things haven't heated up to the full extent that we will see come autumn this year when the election does take place. Instead, what we've mainly focused on is, of course, the US Republican primaries, which was, of course, very interesting, with Nikki Haley shooting her way up the ranks in kind of the polls and proving herself to be a serious candidate to take on Donald Trump, who we know has been facing a great deal of criminal and legal challenges recently, which has, of course, affected both his campaign financing as well as his, general campaign ability. So ultimately, Trump's kind of been within this tough position recently, especially during that primary period, which proved more challenging for Trump than we would usually expect. But ultimately, Trump still is leading the Republican Party for the moment in terms of the Republican candidate for this year, and ultimately as well, Trump is leading in the polls against Biden, as we've covered multiple times now over the past few months. Every single poll has really shown Trump to be the candidate that most Americans want, it does seem, especially over issues to do with the economy, which this article is obviously related to. Now, in terms of Trump and the economy and Biden and their respective policies, we know that most Americans believe that they would be better off under Trump economic wise than they are currently with Biden, and that's kind of been the key sticking point, which has really been driving Trump to be the favorite for this year's election, as ultimately the economy does really decide elections, with the economic state of affairs really being that key driving political factor which leads voters to vote one way or the other. And therefore, Trump has kind of put himself in the prime position by positioning himself in this kind of time where, of course, inflation is higher than usual under Biden, as well as that, we've got high interest rates and, there's certainly certain issues within the economy. And Trump is using that to his benefit by, kind of explaining that he would do something different to deal with that, and that under his presidency, that wasn't kind of the case. As ultimately, under Trump's presidency, whilst we did experience, whilst the US did experience the COVID pandemic during that time under Trump, and that affected the economy in a very negative way, of course, especially growth and employment. Ultimately, inflation has stayed low throughout that presidency, and as a result, that's the kind of key thing which Americans do notice. Rather than noticing maybe GDP on the everyday, it's very easy for an everyday American to notice inflation when they go to fill up their car with petrol or gas in America. So certainly the economic state of affairs is greatly affecting the way voters are thinking, but what we're hearing from Trump here, or what we're hearing from the Peterson Institute, is that Trump's actual economic plans that we've kind of hinted to before will actually cost the American public more than what most people were expecting. And this cost that Americans will have to bear by Trump into introducing these protectionist policies is ultimately one which will hurt America's poorest, which actually have started to support Trump more than previous Republican candidates, as Trump's populism has really attracted those everyday Americans. And of course, this is also interesting to note, since Biden's kind of economic plan has also kind of been critiqued by certain institutes and that kind of thing, who have also noted that basically basically both of these presidents are walking into their kind of respective presidency, should either of them become elected, with a mission economic-wise, which will ultimately drive the US economy further into debt, and even closer to those levels, which makes the US debt level kind of dangerous. So that's kind of been the key worry of many of these institutes. And now what we're hearing from economists as well is that these tax plans and tariff plans by Trump will also hurt the poor the most. So, this is certainly a very interesting article to note, especially when we do know from certain other institutes that Biden's economic kind of progress so far has really been quite a success considering all factors, but it certainly doesn't seem like the public feel it's that way. So that's also something that's always important to keep on your mind, with this being expected to bring with Trump's tariff plans being expected to bring a $500 billion a year burden that the poor will mostly have to pay. The Trump tariff plans include a 10% levy on all US imports, as well as a 60% tax on all goods coming from China. These tariffs will fund his plans to extend a series of tax cuts that he introduced in 2017. And we've previously noted those as what, these institutes, these think tanks, were warning of, because essentially, these tax cuts would greatly affect the US national debt level. But it does seem now that Trump is trying to kind of shift that cost to the kind of new tariffs which he plans to introduce. But what these think tanks are also warning of is that will hurt the poor the most. Now, the Peterson Institute reported on this plan by saying that the tax burden would be shifted away from the well-off and towards lower-income members of society. The reports put the cost of existing levies plus Trump's tariff plans at 1.8% of GDP, with the think tank warning that this estimate doesn't even include the further damages that the US will likely have to deal with as a result of America losing their competitiveness, as well as the likely retaliations from the US's trading partners. The paper also predicts that an average hit of $1,700 to middle-income households. As for the poorest 50% of households, it's being expected that their disposable income will be dented by an average of 3.5%. The current US trade tariffs against China and others has also not been reversed by Biden, with Biden also last week unveiling additional tariffs on Chinese green tech exports, which is something that we noted last week, as well as an important kind of economic tariff, which of course Biden is using in the lead up to the election to kind of represent this kind of distaste that current the poorest of the US are feeling with regards to the economy and trade. And so Biden's trying to kind of incorporate some of Trump's own tariff plans into his own economic policy as well. That's all to talk about in this article, though. Make sure to keep your eyes on anything US political related, and US economy related with the relation to the tariffs there. That's all to talk about on this article, though. Next article to talk about is to do with the death of the key Iranian president. Now, the Iranian president has now been confirmed to have died in a recent helicopter crash. This has come just before the elections in Iran were to be due to be held next spring, and this is particularly significant since he had been considered to have a guaranteed second term. Now, whilst we haven't spoken about Iran as much as maybe other nations of the world, such as China, Britain, the US, or the wider economic sphere of the Eurozone, ultimately Iran does hold great significance with regards to Middle East politics and Middle East geopolitics, which is where I think we've mostly spoken about Iran with regards to, as of course we've recently noted the kind of skirmishes or kind of missile attacks between both Israel and Iran, as ultimately the kind of tensions within the Middle East have been are extremely heightened, and as a result of that, we did of course see Israel and Iran kind of go back and forth with their own airstrikes and missile strikes, with Iran, for the first time, of course, firing missiles from their own territory at Israel. As we do know, of course, that Iran does fund a proxy network in the Middle East to attack Israel, but that was the first time that Iran actually fired those missiles from their own territory. And there were great worries over whether, a wider war within the Middle East, a regional war, was to break out as a result of those skirmishes, but ultimately nothing has happened just yet. And really kind of the volatility has calmed down with regards to that. And so as a result, markets have also calmed down. But ultimately, this article so focuses on those skirmishes and now brings to light a very significant piece of news to do with the Iranian president dying. And of course, why that's so significant? Well, ultimately it creates that power vacuum within one of the most powerful nations in the Middle East, which holds great geopolitical power and ultimately great power to kind of influence wars and that kind of thing taking place in the Middle East, as we know. And ultimately, therefore, the new president of Iran will have, great influence and could bring great change to the way that Iran does position themselves geopolitically, which is why this is so important to note, as ultimately this will be greatly affecting tensions and likely heightening tensions and increasing the volatility around the topic. So that's why this article is so important to note, with the Iranian regime now due to hold an emergency presidential election on June the 28th. And now this death could push Iran's tense political rivalry amongst loyalists of the theocratic system to a new level, according to the FT. Potential new candidates for the president include the hardline Speaker of Parliament, as well as another hardliner from a prominent clerical family, as well as a former nuclear negotiator. During the interim period before the election, the current vice president will take the lead of the nation. In recent months, political infighting in the hardliners camp has bubbled to the surface, with some more radical figures calling for stricter policies on freedom. So, of course, a more hardline radical figure coming to power could, of course, bring a great deal of geopolitical ramifications as well, which will greatly affect, other assets such as oil and gold and that sort of thing within, as a result of, the risks of regional war within the Middle East heightening. So that's why this article is so important to kind of talk about, and why it's so important that you also stay on top of this topic and any other articles which come out to do with this kind of topic. So make sure to keep your eyes on similar articles and that kind of thing, and this kind of issue within the Middle East as well. That's all to talk about in the articles, though. Next to talk about, of course, is the charts, where like always lots is happening, and like always as well, we have to begin on the US 30, which in yesterday's weekly morning market briefing, we noted that price was kind of at these all-time high levels for the US 30, and this was ultimately as a result of last week's inflation figure coming out and showing that basically inflation's on the decline, and this kind of switched up what investors were expecting, and ultimately led investors to start moving back to that more dovish outlook on the Fed's monetary policy. And that's why we did see this swing up in the US 30 as traders did start to price in those lower interest rates sooner than previously expected. And as a result of that, price was able to break above this key liquidity zone, which we had noted out, and ending off last week, price hooked back onto that liquidity zone and used that area of liquidity to push higher a slight tad. That said, starting off the week, price has sold off and is in the process now of breaking through that key liquidity zone. Why that might be? Well, ultimately, as I said many times, that inflation figure, whilst it did show a decline, came in line with economists' expectations. So we have to expect that the markets had already somewhat priced this in, or at least those key financial institutions had already priced such price action or data into the market. As a result, that kind of bullish move that we did see is likely, kind of overextended itself somewhat on the recent movement, and therefore we are now seeing this sell-off. Add to that the fact that, as I noted last week, a clear bearish divergence was, of course, forming on the RSI, as I noted just here, and this kind of area of new price, well, or like uncharted territory for price just above this key area of resistance, did of course show that maybe price was ready to pull back somewhat before price can actually continue that push further into uncharted territory. As a result of that, I've kind of noted out this key Fibonacci retracement tool to kind of note out the key areas which price could retrace to before continuing higher, with the kind of key level to note really being that 6180 and maybe that 50%, as that 6180 does line up in a very clean fashion with this key liquidity zone that we noted out recently as the area which price had clearly come up to and sold off from, but 2 times, arguably 3 times. So ultimately, this area is a key area of liquidity, previously acted as an area of resistance, and certainly in the future could now act as a key area of support. So it would be interesting to see whether price can make its way back down to these levels and maybe interact with that 6180 before continuing higher into these new uncharted territories. Next to talk about though is the dollar, where there's not as much to say. Obviously last week we saw that sell off as a result of markets pricing in lower interest rates, but ultimately ending off the week we actually saw that retracement take place, which is similar to what we're now seeing on the US 30, with price kind of swinging back to the upside and interacting with that key 50% Fibonacci retracement level, just ending off that week. And in yesterday's weekly morning market briefing, I did note how that kind of did give us the sign that price was to continue lower this week. That said, starting off the week, price has really consolidated and failed to move lower and is currently sitting around that 38.20 level. That said, whilst that kind of does show that price is stuck where it is and consolidating, still price has not moved above that recent retracement level. So ultimately, price is still in the kind of bearish movement territory. So we could certainly still expect a sell-off to the downside, with price completely making its way down to this minus 27.2% Fibonacci retracement level, Fibonacci extension level, pardon me. That's all to talk about on the dollar though. Next to talk about is Euro USD, which not much can be noted for since price is still just currently hanging above this key liquidity zone. We did note at the start of the week that price had just interacted with this area of liquidity and was holding just above it, so we could see this move higher to this key liquidity zone this week. That said, we haven't seen much Eurozone data yesterday, or dollar data really, for price to actually find that momentum to move higher, and that's arguably why we haven't seen a move yet to that upside level, and as a result price is still hanging just above this key liquidity zone. As for pound yen, price has now completed this move to the upside and has interacted with this key Fibonacci retracement Fibonacci extension level of minus 27.2%. So that's of course very, very significant, and arguably now we're likely to see a sell-off as price does kind of remove, as the market does kind of remove those orders from the market, those buy orders from the market, as those kind of gains are pardon me, as those gains are kind of realized, and the market then therefore does sell off and move back down to this key liquidity zone. So definitely keep your eyes on a movement to the downside now for pound yen. As for Bitcoin, we've seen a great deal of bullish price action recently, with price swinging to the upside, obviously following last week's inflation figure, which has played into this bullish move. But ultimately Bitcoin has really continued this swing to the upside, has now broken completely above this liquidity zone, as we said yesterday, but did start off the week by kind of using this area of liquidity once again to find momentum and push to the upside, with price interacting just recently, ending off yesterday with that $70,000 a Bitcoin level, which is of course very, very, very significant. And now price is near those previous all-time highs and very much near this next area of liquidity and resistance to note. So keep your eyes on Bitcoin. As for gold, price is very volatile at the moment to start of the week, and price has sold off from those highs kind of made ending off last week. So price to start of the week moved a slight tad higher into kind of uncharted territory, never seen before, and then sold off from that area around the kind of $2,450 an ounce, I believe. So it's sold off from that level and moved to the downside, and has now interacted with this key 50% Fibonacci retracement level and has found some bullish liquidity there. It will be interesting to see though whether the price does make its way just a slight tad lower to that 61.80. So keep your eyes on gold. Lastly to talk about though is oil, which really has stayed where it is. A slight bullish move, a slight sell-off to end off Monday though, as ultimately not much is to say for oil. That's all to talk about on the charts though. Lastly to talk about, of course, is the economic calendar. We're receiving a great deal of economic data today. Now firstly, we are receiving the RBA's meeting minutes, as well as the Chinese FDI figure, as well as the US Treasury Secretary Yellen's speech, as well as that receiving the Eurozone balance of trade figure, as well as the Canadian inflation rate figure. Followed by that, we're receiving the Bank of England Governor Bailey's speech, as well as numerous Fed official speeches. So lots of Fed rhetoric to listen out for and understand. So listen out for all of that. But we've covered lots on the articles, lots on the charts, and lots on the economic calendar. You hope you have a great trading day. But that's all from us at Wildwood Capital. Have a great one. See you later.